Look, the next 3 days are critical and they will determine whether the market ends higher or lower for the year. Welcome back. Let's get into it.
This is always like the threat. If governments aren't disciplined, eventually the market will discipline them in the form of bond buyers refusing to show up and or selling off their bonds.
Okay, so number one, right? Let's get straight into it. Number one, tomorrow, I bet you guys didn't hear, they didn't really show it in the news. Tomorrow we have Janet Yellen, right? And what is she going to do? She's going to issue, she's basically going to give us the Treasury refunding, right? How much are they going to refund? Okay, what does this have to do with anything? It is literally rates. This is what's driving rates. So in the background there, you do have the charts. You guys can still see the charts. Let me move it over a little bit so you can see. And basically, Janet Yellen is going to announce how many bonds or how many treasuries that they are going to issue. So how much debt are they going to put on the table, right? How much debt are they actually going to put on the table? How much are they going to create? How much are they going to issue? And that's directly going to impact the bond market. You got 2-year, you got the short term, right? This is 2-year, as you can see it. You got 30-year rates. And really, this has been plaguing the market more than anything else is these yields, these bond yields. So if she issues, or if they start to issue treasuries at the long end a lot faster, rates could go higher. The bear case here is they announce more. They announce a lot more, right? The size is bigger than expected. So the size of debt is bigger, which means yields go higher. That's the bear case. The other bear case is they target the long end a lot more. If they target the long end, that's really what's been putting pressure on the market, because the short end is being eaten up by the reverse repo facility. Okay, that's kind of difficult, but what you need to understand here is tomorrow we do have the Fed rate decision, but more importantly, Janet Yellen's going to announce the Treasury refund, like refunding funding the government, right? This has been a debt issue the whole time. So keep your eyes on that. Where I'm going to be looking for how rates actually respond going forward. Okay, in the background, you can see it. Look at the 10-year, look at the 30-year. If they start issuing, or if they start targeting the long end of the curve, you might get Bill Ackman's, you might get the bond vigilantes come back in and start shorting bonds once again. Okay, that's number one. All right, number two, we talked about this yesterday. Number two, tax loss harvesting. Okay, this ends. The mutual funds are, by the way, $32 trillion. The mutual funds are a $32 trillion industry. Doesn't mean all of them are going to stop selling, but they've been selling their losers. The reason why tax loss harvesting is basically if you're ending the year, right, and their fiscal year ends in October today, if you end the year and you're going into the end of the year and you have a lot of losses, well, you just sell for a loss, and that actually helps your taxes, right? That helps you claim a loss, and they don't want to buy that back. They don't, if they own it, if they own the stock, if they own the equity, it doesn't go down as a loss. It doesn't hurt them it doesn't help them for tax purposes, right? So what does that tell you? There's a lot of names they want to buy back. Probably some, Magnificent Seven, who knows what it is. They're going to buy back equities starting tomorrow. Who knows if they start, they buy them all back tomorrow. It's probably going to take some time, but that's why November, that's why seasonality is so important going into this market. This is why October is the bear market killer. This is one reason why we see the last 3 Octobers. Okay, 2 of them, the bear market ended, right? The selling stopped because of tax loss harvesting. Also, you have macro, you have technicals, you have fundamentals, but you have the Fed. But for the most part, keep that in mind. So number one, Treasury, right? Janet Yellen's going to announce, the expectation for how much debt they're going to put on the market and where they're going to put that debt on the market. Expectations, bear case, bear cases, they do more. Basically, the bull cases, they do less, and they focus on the short end, which can be absorbed, right? Number two, obviously tax loss harvesting. That's a bull case right there. We kind of know, positioning. They're selling to benefit from that, and that's going to turn around. October is usually the bear market killer, and also this is the 32 like if you don't think this affects the market, you're tripping. This is a $32 trillion industry, the mutual fund industry, right? Who runs this? J.P. Morgan, Schwab, the big State Street, the biggest asset managers run these mutual funds. And trust me, they're going to start buying back at the end of the year, right? I don't know at what pace, but they'll start buying back. Okay. Number three, obviously the Fed rate decision. Everybody's focused on the Fed rate decision tomorrow, but what's important is they're probably going to pause. Okay, the Fed is probably going to pause here. We're going to get a pause. More than likely, a surprise would be very bearish. That's the bear case. And the real question is, what is their guidance? What kind of visibility are they going to give us going forward? Okay, let's go to the 2-year. This tracks the Fed funds rate the most, right? The 2-year yield. That's why everybody focuses on the 2-year yield. And so you're going to be watching this as they come out with the rate decision. They likely do pause, but the question is, do they hike in December? Okay, is the tone going to be enough to hike in December? Are they going to be hawkish? I think they're going to be hawkish, but do they signal that they're done hiking rates? They're probably going to be more data dependent more than anything. Okay, likely to be data dependent, but the guidance is going to be important, right? The guidance for the Fed guiding forward. How are they going to project how they're thinking about the economy? And I think they're going to be a little more dovish because GDP is actually came down for the fourth quarter versus the third quarter. Inflation is softening still. Oil prices are not spiking at the moment. We're going to go over oil. Oil is actually pretty soft right now. So the Fed could, this could be a catalyst. The bear case is the Fed hikes. That's a hyper bear case. The other bear case is the Fed says we will hike in December. That's on the table, right? It's all about the tone there. So keep track of that. Okay, so we went through that. Also, we have the ISM numbers, right? So if we take a look at this ISM, I'll say this really quickly. We'll come back to this. The ISM PMI numbers. Right now, the economy is starting to recover, even though you hear recessions, bullcrap. There's not a recession. Consumers are still spending. We went over all these charts. Everything's, it's not like consumers are the strongest they've ever been, but they're still spending. There's still $1 trillion, in savings, in excess savings. It has came down, but it's not to zero yet, right? Maybe next year, maybe 2024. That's what it looks like. 2024 mid, right? So we're talking Q2. That's probably when you get the recession really start to knock because the shadow liquidity runs out. Okay, consumers no longer have excess savings. Unemployment might creep up. We'll see if companies can hang on here. It's all about employment, which we're going to get to here. All right, so ISM numbers, this is the manufacturing part of the economy, and this usually leads a recovery, and right now it has been moving higher. New orders are up, production is up, right? Average hourly earnings or labor costs are down, and labor units are up per good and service produced. That's going higher per hour worked. So that's going to be critical also tomorrow. Tomorrow probably has the most jam-packed news, right? These are the most headlines going into the year is tomorrow. This is huge. And then you got job openings too, right? Job openings, they are falling, but they're still positive. You want job openings to fall. We're going to go over that data later. I just want to spit this out now to get to the point, right? Let's get to the point here. Job openings, you want those to be in line or lower. That's fine. There's still positive jobs growth, but you don't want it to be fast because this impacts wages, wage inflation, supply side inflation, and that's what the Fed's focused on, okay? ISM manufacturing, I think it doesn't matter. If it goes lower, that puts the Fed on pause. That's a little more dovish. If it goes higher, it says, hey, the economy is not going into recession. The ISM is important, though, for risk assets like crypto, like Bitcoin, like Ethereum, because they usually correlate with the ISM manufacturing cycle. So expect if that gets above 50, which would be expansion mode, the economy is going from contracting to recovering to expansion. If we hit expansion, I think crypto starts to take off ahead of the actual ETF, okay? And then for the Fed tomorrow, obviously they're going to give guidance. What happens there, okay? Now, next, Thursday, okay? That is all jam-packed on Wednesday, okay? Thursday, what do we get? Apple earnings, okay? Now, Apple's the biggest stock in the market, $2.5 trillion. It's bigger than the Russell, so this is going to be the most important earnings report when you add them all together, okay? What you need for Apple to be a bull, you want them to hit their expected EPS, 1.39, right? The question for investors is the earnings retraction? You can see this is the chart of the earnings going higher, and they've been, up and down. Is the bottom in? That's the question. Is the EPS hit the bottom? 1.2 earnings per share, okay, was the bottom previously. So we want, if it's anything below that, the market might sell off pretty drastically. Okay, the expected revenue, 89.81 billion. If we get anything below that, the market could sell off drastically. So that is the question. But more importantly than just the actual top and bottom line earnings, We also have to look at margins, right? What do the margins look like? Are they retaining their margins? Also, what are the segments? What about MacBook, right? We just had an announcement yesterday of the M4 chip. So, and they lowered the price. This is deflation. They're lowering prices. You got Tesla, you got Apple lowering prices. Don't let me get too excited here, because as prices are rising in an inflationary environment, you got the best companies able to lower prices. This is deflation, right? This is what keeps the bull market going here. So Apple is producing that. Does it materialize today, tomorrow? I don't know. We'll see how that plays out. But you're going to look at margins. And number one thing that the market wants to see, determining whether stocks really can look forward, is guidance. What are they expecting going forward? How does it look in China, right? How does it look in the other segments? But what is your guidance in the Apple iPhones, right? iPhones, MacBooks, services. I bet services are going to be strong. That's probably going to be their key that keep them higher. So guidance is going to be important for Apple earnings tomorrow, or Thursday. I'm sorry, that's Thursday. And then on Friday, you have, actually, we can turn to this. Let's actually turn to this one. Friday is going to be the employment report. This is what kind of kicks things off. And this will kick things off. Obviously, we see the market recovering today, but let's take a look at the employment numbers so you can see what you need to focus on, whether you're a trader, investor, whatever you're looking at. I think we're going to get a good report. Here's what we're looking at for Friday. Non-farm payrolls, which are jobs. How many jobs are in the economy? We got a big surprise in the last print, 336,000 jobs added. Those have been revised up and down. So you can't trust everything, but the market's going to react. And as long as jobs are strong, as long as they're positive, the market should be well. But what the market wants to see is in line. But the crazy thing is, in the last report, the market still went higher, although jobs turned up, right? Jobs exploded to the upside. And I've been signaling this, which is the bond market, which the bond market controls interest rates for the stock market, not the Fed. The Fed controls 24-hour rate for banks, which does impact credit and all that. But the bond market has been driving the stock market lower or higher. Are yields higher? Are they lower? And what I've noticed, and we went over this yesterday, is we've been getting hot GDP. We've been getting hot inflation numbers, a little hotter than expected. Not like super hot, but hotter than expected. The bond market has not made a new high, right? When I say the bond market, I'm talking about long bonds, right? Yields have not made a new high. So this actually started in the last, non-farm payroll or jobs report, when we got 336 and the market still went higher despite a hot jobs report. Why is that? Because even more importantly is the unemployment report. Okay, well, not really. I'm going to say this is even. Sorry, decline. I'm going to say this is even. But unemployment, the market wants to see this come in line. If it's higher, guess what? The Fed has to pause. If it's lower, it means a strong economy, no recession. I don't think those are going to be as important unless they're tremendous upside or downside surprises. But what the market really wants to see is right here. This is what determined, right, the market actually going higher, which was average hourly earnings coming down. This is wage inflation. This is what the Fed does not want to see. And they probably already have this data, which is, are we getting wages inflating, right? That's the wage inflation, supply side inflation. Are companies having to pay more to attract employees? Probably not. Immigration might be helping that. That's a month over month data. Average hourly earnings year over year, those have been dropping. This is why the market can go higher, even though growth is up, even though jobs are robust, because it costs less to get an employee. Also, they're producing more, so production is up. Production eats inflation. Apple, Tesla, right? Producing or running your business at a lower cost for customers also eats inflation. Okay, McDonald's didn't do that, but they still went higher, right? So wage inflation is what the market's going to focus on here. Also, participation. How many people are coming into the workforce? That's going to be key. And then you get ISM services later down the road, which is the service economy. The economy is constructed or has two components: manufacturing and services. Services have been positive. Services have been leading the market. So do those drop drastically? Are services, the forward-looking indicators for service, drop, or are they up? So a lot of data this week. These next 3 days are going to be huge for the market. Okay, now we don't just go over the critical data, but we're also going to go over the technicals. And today, what did we get? What did we get today? Today we had, oh, by the way, we call this, okay, let's check this out really quick. Okay, what do we got here? We got here yesterday's thumbnail, which was market killer. October is the bear market killer. Why? We talked about that. Tax loss harvesting from the mutual funds, a $32 trillion industry. They're going to start buying back, right? Or they're selling stops at least. The selling starts to decelerate tremendously. Okay, and there's a lot of and so you might get, selling stops and markets go up. And I said here yesterday, incoming market bounce. If you're new, we call the bounce. Does it sustain? I don't know. We have a lot of data going forward, so I don't know if the bounce sustain. We can't predict the future, but we did say, hey, we're going to get a market bounce here. It's oversold, and when we look at the market here, taking a look back, okay, let's go to S&P. What are we starting to see? A bounce for the S&P. We are now up 2 days in a row. Okay, now that's not huge, but it is progress because markets are oversold. We use technicals here. Where's my technicals? What is this? I don't care about EPS estimates. Okay, I don't know what happened there. Okay, where's my RSI? Okay, I don't know what happened to my RSI. Well, let's go to the Qs. Look, at the Qs are at least, coming back into the trend. So the Qs are coming back into the trend. I don't know what happened to my RSI. Let me add it back. I guess it somehow disappeared. That sucks. Where's my RSI? I'm gonna have to redo the colors. Whatever. Anyways, we've been oversold. So we're due for a bounce, and we got that bounce finally today. And what can get us higher, right? What's gonna get the market finally, back into the bull trend? Because we broke the bull trend. It's going to be all this data. It's going to be, tax loss harvesting coming into play. But more importantly, is the Fed done? Is the Fed done hiking is the big question. Is the Fed done hiking, right? Is the Treasury market, is the debt that's going to be put on the market, 78 billion, I believe they're going to put back into the market. It has to be eaten up. Bonds are going higher. And I think, bonds will start to capitulate, because if we look at here, there's a massive bullish divergence for the bond market. But this is make it break it tomorrow, because if Janet Yellen comes out and the U.S. Treasury says, hey, we're issuing a lot more debt than we thought because we got to take care of the war on two fronts, over in Ukraine, over in Israel, over in the Middle East, well, the bonds could actually fall further, because they're literally debasing the bond market. They're literally creating more bonds, more treasuries, more debt, and there's not enough buyers. There's just not enough buyers. If that is the case, maybe we go lower. But from a probabilistic standpoint, okay, there's huge divergence here. This is buying pressure. It is climbing. If this breaks out, then you get rates come down. What case would that be? That would be, Janet Yellen or the Treasury issues less. And they say, hey, we're going to focus on the short end because we know the short end can be absorbed by who? By the shadow liquidity. Okay, here's shadow liquidity. This is the short end. Okay, this is shadow Fed, shadow QE. This is shadow QE right here. This is the reverse repo facility, a bunch of cash parked there and this cash has been climbing. Where is it going? It's buying up all the treasuries. So that's what you want. That's a bull case. That is the bull case. Maybe I'm talking too quick. Maybe I'm doing too much, but I'm just trying to get the information out quickly, and you can stay because we usually do 45 minutes, maybe longer. So you can ask more questions, right? If you want to know, but I want to get it out to you, those of you who already know, pretty quickly. And then Apple earnings, that's going to be a big deciding factor. I think the employment report's going to be just fine. I don't see nothing crazy that we've seen. If anything, jobs are plentiful, it's robust, and wage inflation is coming down. But Apple earnings are going to be huge because China might be too weak, but it's all about guidance. Guidance is the key here. Okay, we also have AMD earnings coming up. So let me get your guys' comments no, you're good. Let me get your guys' comment. Let's go for the market news. Yeah, 100%, bro. We got a nice bounce. We did say, hey, we're going to get a bounce here. Tesla's starting to bounce also. I changed up the candles if you guys didn't notice. It looks a little better, I think. I think it's a little easier to see if these candles are a little brighter. So S&P is finally bouncing. It's been pretty ugly, pretty treacherous here. And, you get that extreme sell-off. But look, oversold. We came into the oversold territory. You always bounce. Historically, oversold means you're going to get a bounce. The question is, do we get continuation? Is that continuation supported by the macro, by the Fed, by the fundamentals? Right now, earnings are beating expectations, by the way. What did we get on Twitter? I saw something on Twitter. I believe I retweeted it, and it was, let's see, where's my retweet at? Because there's so much information out there. I want to give you guys the best info. Oh, also the crude oil market. This is why I'm also very optimistic. Okay, oil is the wild card here. Okay, and look at oil. It is rolling over. Crude is, I don't want to say it's collapsing back to zero, blah, blah, blah. But crude is very soft. And what does that mean? No inflation. The war is not doing what we thought it was, right? The war is another one. We might get a Friday sell-off regardless because investors right now are like, okay, if the war escalates, it does look like it is starting to escalate, obviously. But the question, does it get to that critical implosion point, right? Where Iran jumps in, where you get more, or is it just, is it just these, Hamas and Hezbollah, whoever it is? I don't know if I could even say that on here, but either way, do you want to know, does the war escalate? Right now, oil is saying no. Part of the reason, okay, that oil is not escalating, and this is key, we talked about it yesterday. Okay, the biggest consumer, yeah, the biggest consumer of oil is the US. And guess what? We already hit peak consumption back in the summertime. Since September, in red, oil demand is falling. At the same time, we are also the biggest supplier of oil in the world, and we're supplying more at a record level. Okay, and guess what? Saudi Arabia said we'll pump more oil if oil prices get out of hand. So the oil traders, the longs, they're cautious here. You need a black swan. You need the war to accelerate significantly for oil to get back up to 100. Never even got to 100, right? So this is actually playing out in the favor of the bulls because all inflation is coming down. Vehicle inflation coming down, okay? I'm not talking about the prices versus 2 years ago. I'm talking about the rate of change on a month-over-month basis, on a year-over-year basis. Vehicle inflation, housing inflation is coming down. That's 2/3. The other third is energy. Well, guess what? On the next Fed print, on the next inflation print, my bad, if oil continues to stay down here, which is the month of October, well, November's inflation is going to be, it's going to roll over. That's going to be a tremendous bull case because now investors can say, wipe the sweat off their brow and say, oh my God, okay, inflation is not accelerating. It's actually doing better. And guess what? The economy is not rolling over. And guess what? The consumer is softening, but they're still spending. This is a Santa Claus rally setup, in my view. Okay, so that is the oil. That's why oil, I believe, is coming down. And if the Fed does pause here historically, right, going back to 2016, when the Fed pauses, even though rates are elevated, this is actually rates going up, but this is, I think we're in more so 1994 to 1998, which is, rates are at 5%, okay, on the bond side, on the yield side, and on the Fed funds rate, but the market still roars higher, right? NASDAQ was up 275% because of new technologies, because the labor force, if you don't have a strong labor force, well, guess what? You have technologies to actually fill the labor force, to fill the shortage. And markets go higher because fiscal policy, fiscal stimulus goes into that market. So I still think we're setting up for a bull market rally. Sorry, I never got to the actual earnings picture here. What is the earnings picture? Let's see, earnings update. So far, 260 companies have reported earnings, 52% of the S&P. So half the S&P, about half of the S&P has reported. 78% are beating estimates by 6%. Okay, so they're beating. So guess what? Earnings are not as bad as, estimated according to a lot of people. They're doing better, right? Earnings are doing better, and the S&P is now moving up. Now look, on the last time we had earnings, you know what happened halfway through? Halfway through earnings, let's go to Apple really quick. Halfway through, I always think it's Apple. It's always when Apple actually, what the heck is this? Is this inverted? The hell is this? Oh, that's not Apple. Excuse me. It's always when Apple reports, right? So the last time Apple reported, okay, the S&P sold off. So this was August 3rd. Now let's go to the SPY. Let's go to the SPY. This is what I'm speaking of, okay? Let's go to the SPY. August 3rd. What did we see for the S&P? This was when the S&P sold off. So what does that tell you? That you get a run up into earnings. Let me mark this. You get a run up into earnings. Okay, here's the run up into earnings, and then Apple reports, and pretty much now you digest the news. This time around, we're getting Apple reporting in 2 days, okay? And we've been selling off into earnings. This is a sell the rumor, buy the fact, right? As long as the macro stays together, inflation comes down. As long as the war doesn't accelerate and oil goes higher, we need the dollar to ease a little bit to stay soft, and we are getting that. So I think we're going to bounce here. Looks like, unless, Apple numbers are pretty bad, but the Fed is also pausing, right? So you add that on. The Fed is pausing, and we look pretty positive. All right, so I think I'm done ranting at that point. What are you, 25 minutes in before you guys start to comment? Let me know your comments. We got, no problem. DWLI, Duil. Always here for giving you guys the best macro I can, the best news I can. Bing bada boom. Yep, 100%. Oh, you know what? We have earnings. We have AMD earnings. My bad. And then also, if you're on TikTok, I probably listen. There's a big feed. What up from Texas? There's a big feed. So jump on if you guys don't mind, jump on to the YouTube, subscribe, give me a boost there. Subscribe. Trying to get to 1,000. I'm almost there. But I lose your guys' comments in the stupid feed. So if you don't mind, jump on to YouTube. Link in the description, and you can your comment will be stuck, and then I can read it and actually discuss that with you. Other than that, I have to scroll back, and sometimes it just doesn't show up. So if you want me to see your comment and respond to you, and I just don't look at it, go ahead and jump on YouTube. I'd appreciate it. It'd be a lot more helpful. So we also have AMD. How did they report? I bet you AMD already reported. But I'm gonna find that for you. Let's go ahead and go to the AMD. Let's go to AMD. See what the reports are on AMD. We'll look at Tesla. Tesla's starting to bounce. I did add a contract today because I'm down. I'm down on Tesla, but this is the risk you take. This is a risk you take, and I think we're going to bounce. I think the overall market bounces. It's going to come down to Apple and all this other, conglomeration of data. But hey, mutual funds are done selling. Okay, starting tomorrow, they're done. The selling pressure really starts to slow down here. So I think we at least come back to the uptrend for S&P. I think we come back and retest 438 on SPY, and then if we look at SPX, we're talking 4,400. So I think we still got to get past this level. This is a key level also of technical resistance, but I still think we come back to 4,400 after earnings and going into next week, and then we'll see if we can sustain the rally for the most part for the S&P. I know a lot of companies are doing well, but I do want to pull up AMD. Let's see. Let's go ahead and pull up AMD here. What the hell? Where's the live feed at? Bitcoin Golden Cross. Oh yeah, Bitcoin looks good too. Oh, and guess what? Dude, there's a lot of optimism here. I think investors honestly are coming in strong, not just for equities like, risk assets, but also where's the live feed at? Why is it not showing up? Don't you hate when they change the page? Also for HYG, dude, check this out. There it is. HYG, which is a fixed income. Ooh, AMD got crushed. HYG is a fixed income instrument for investing. If you don't know what that is, well, take my course. It's coming out in a couple months. I know I say a couple months. I just want to make sure I got everything. I don't want to rush it, make it stupid. So HYG is an instrument for fixed income. It is yielding almost 10%. That's insane. And it doesn't move much. So you're basically getting what? You're basically getting 9% yield. Now, you guys don't do that. You're better off, not financial advice, you're better off buying crypto because crypto's up 9% on a whim, right? Especially coming from the lows. But if you happen to be, you have millions of dollars or you have 500,000, that's a lot. I think if you invested 300K, I doubt anybody's on the stream with 300K because the rich people are, they're watching other streams where, I'm just kidding. So if you have 300K and you actually got the HYG, you would yield somewhere around $2,000 a month with 500K. With $1 million, you'd yield 300, 3,000, 4,000 a month. So it doesn't sound great, but you can live off that, right? You can live off that. And, that's a lot. That's actually a lot. And then if it goes up, well, you're getting more because if the underlying asset actually appreciates and the Fed cuts rates and it does appreciate, well, I mean, your underlying asset goes up also. So HYG is one of those assets. It's also credit. All right, so let's look. I know I'm over here talking about it. I didn't even get on there. Let's go ahead and look at it. They missed, but let's hear the actual report. Make sure you guys can hear. Let me know if you guys can hear this. Sometimes it doesn't work. You move it off. Let's move this over here.
Guidance coming in that is listed.
Can we hear?
AMD earnings are out. The stock moving lower initially. Christina Partsinevelos has the numbers. Christina.
Well, what we're seeing is earnings per share coming in at 70 cents adjusted. That is a slight beat, but its revenues also beat 5.8 billion. So top and bottom line beat. But what's concerning is the guidance for Q4. We have Q4 revenue guidance coming in at $6.1 billion. That is lower than the $6.37 billion that the street was anticipating. You're seeing the estimates for gross margins at 52%. So that's in line. So that's a little bit strong. If we go break it down to categories, data center revenue, 1.6%. So flat at that point. Client revenue, which encompasses PC sales. We saw strength from Intel just very recently. So that did a little bit better at 1.5 million.
So look, you could say they beat top bottom line, right? These companies are beating top and bottom line. And you could say, but their guidance is lower. So the whole market's going to roll over. It's going to collapse. We're going back into a bear market. We're going to 3,900. Maybe we do. But you also got to keep in mind that if it was that simple, you miss or beat guidance. If it was that simple, why the hell did the market roar in October of 2022 when guidance was crappier, when guidance was worse? Because investors are looking 12 months ahead. Okay, so it's not that simple. Guide higher, you're going higher. Guide lower, you're going lower. It's not that simple as a whole. I think what we're seeing here is investors have been selling, and now they're looking for the bottom of earnings. They're looking, okay, maybe guidance isn't up strong, but they are beating. The bottom at least is in, and now we're looking forward. It's not just about guidance for the next quarter. It's guidance into the next year, right? Keep that in mind. So I think, again, once Apple reports, you might get a shakeout, and then boom, we're going higher. That's my view. If all the other stuff we said before, paribus unis, right, everything else held equal, the Fed pauses, inflation comes down, yields don't break out, I think we're going higher. But anyways, it looks like they missed.
Gaming coming in.
Oh, no, they didn't miss. They were solid, but guidance is lower. The stock fell off. We'll look at the stock also.
In line as well. Just one line, John, that stood out to me in this report is that in the fourth quarter, we expect to see strong growth in data center and continued momentum in client, which is the PCs, partially offset by lower sales in the gaming segment and additional softening of demand in the embedded markets. The embedded markets is the programmable chips. We saw weakness from Lattice just yesterday. We saw weakness in Intel's programmable chips business as well. So that category doing a little bit weaker and expected to be weaker in Q4. You can see shares are dropping 4.5%, partially because probably of that Q4 revenue guidance.
Embedded, too, you point that out. I'd seen some analyst expectations of $1.32 billion in revenue in Q3 for that, and it looks like they turned in 1.2. That's a pretty profitable business for them, no, and a little bit of a miss. That's the one line.
Yeah, that's what I was referring to. So that's 1.2 billion, down 5% year over year. To your point, yes, that is a miss if you're using the FactSet estimates of 1.3 billion. So they missed an embedded. They were in line with gaming. They were higher with clients, and they missed ever so slightly with data centers.
All right, Christina Partsinevelos, thank you.
Thanks.
Let's get some more reaction from Wedbush, Senior Vice President.
Okay, cool. So that was it for AMD. Actually, I'm not gonna. They actually changed the software on me, so we're just going to use TradingView. Probably most of you guys have it anyway. So this is after hours here. Let's see if we can I get the after hours looking a little different? It's kind of hard to see, huh? The after hours. Let's see, post market. Let's see if we can make it a little brighter. After hours, what color do we want it? Red? Yeah, let's make it red. Okay, see. That might be too much. Yeah, that might be too much. All right. Make these settings better. This is how you change it, by the way. What is this? Background. Okay, yeah, let's just make it a little more transparent. There we go. Or less transparent. All right, cool. So AMD down to what, 94? I bet you they recover going forward. I think it's still sell the news, buy the rumor, reverse psychology here. And the stock, let's see what the stock looks like on the daily chart. This thing is down tremendously. I'm not buying it yet. I probably won't even get into it right now. I'm looking at crypto. I think crypto is going to have a nice run. But these are buying levels, 94. It didn't drop that much, to be honest. We were at 93 the other day. So again, I think the sell pressure is starting to bottom here. I think the sell pressure is starting to bottom here for the overall market. Okay, well, you could have one more flush, of course. Now the dollar, you don't want to see the dollar going up. This is definitely negative. You don't want the dollar moving up. That could be off fears. Everybody's scared the dollar might spike going into the end of the year. That is definitely because of the war, right? But again, tomorrow, this is going to be critical, man. Tomorrow, you have 10-year yields, the cost of capital, right? This is the cost to borrow money. This is probably the biggest factor to the equity market going forward. It looks like it's wedging also. This is a pretty bullish trend. But you have two components here. You have number one, you have Janet, I don't want to say Janet Yellen, but you have the US Treasury issuing debt. If they issue way too much debt, automatically prices fall, rates go higher, right? That's how it is. So the question is there enough demand? Well, if the Fed does pause tomorrow, if the Fed leans a little more towards a dovish stance where they're like, hey, the war is causing, things to slow down. Some people say it'll cause things to speed up. I don't think nobody's clear on that, right? It's not really that clear. It's really not clear at all. So the real question here is, who wins? Jay Powell with the dovish tone, or the Treasury with the hawkish tone? Trust me, they've already talked. They're going to try to orchestrate this to where 10-year yields do not spike. Who knows if the bond market actually pays attention, though? The bond market might just break out, right? It moves on its own anyway. So we don't know. Either way, this is going to be critical. If it goes up, dollar goes up. This is the bear case. Dollar goes higher. The dollar is going to stall any type of risk asset from moving up. Everything's priced in dollars. But I'm still optimistic because, S&P, now we can take off pre-market here, I think. Let's take the pre-market back off. S&P is extremely oversold. So that's what I see. I feel like this is the cheapest stocks we'll get for another 10 years. Yeah, unless there's a black swan, I think pretty much, unless there's a black swan, because we are running into a very explosive technical revolution that a lot of people don't believe in. That's totally fine. They don't believe in full self-driving. By the way, I think Tesla today, the regulators did something, and Tesla's off to the races. Nah, it's not yet, but remember we drew this reverse head and shoulders yesterday. It looks like it's starting to play out. Maybe we retest, like today we retested, maybe in the morning we retest, we come back because we still have 3 more days, right? And then we break out. So we want to see the breakout of this pattern here, but it's not making new lows yet. It's not making new lows yet. And trust me, there's a lot of buyers coming in. Tesla's extremely oversold. Talk about oversold. Go to the daily. Yeah, we're back. We got down to levels from the beginning of the year where we had the tremendous rally from 105. I think we got down to 100, actually like 99. From 99 all the way to into February. So like a couple months later, we went up 100%. So we're at that level. Does that mean we're going to go up 100%? Not exactly, but if the Fed does pause, that's going to be constructive for investors when it comes to automotives, because now you're done. You're not expecting rates to go any higher. And also Elon is, creating more demand for the product by lowering prices. BYD did break a record yesterday, which kind of caused the stock to sell off a little bit, but it's more so a lot of traders. Ultimately, if you look further down the road, they're still set up to do the best, right? The supercharger network is now expanding even further. When they find out how to monetize it, there's another revenue stream. So that's what we're looking at there. Let's see, what else do we got? Earnings guidance are way down, so downturn just started. Dimayush, what up, Dimayush? Well, earnings guidance, guys? We have a comment here from Dimayush on TikTok. He said earnings guidance is down. I would argue that earnings guidance has been low, which actually sets you up to beat expectations. So guidance for this quarter is actually lower, so people are beating. The question is guidance going into the fourth quarter. I'm sorry, going into Q1. That's the real question, right? Is guidance going to be lower going into Q1? And if it is, then yeah, you're right. Stocks should actually be weaker. But the problem with that narrative is people don't understand market psychology, which I'm not saying, the market can't sell off, but unless the recession really takes over, like you can have, right, the economy is the engine to keep things going. If the engine is still running, stocks will still get bid up because Apple, Amazon, Google, they can still create more revenues. So investors, when the market sells off this much, we're in a correction territory. We're down, just FYI, if you're down 10%, you're in a correction. That's where investors typically buy in they don't wait for a recession. They don't wait for a bear market to buy. We haven't had a bear market, right, for 10 years. You thinking last time we had a bear market was these big black swan events, okay? This event right here was basically the tariff war between China. So you had that war, the tariff war, which is, that really crushed things. Also, I remember Apple actually reported here. Oh no, this was back here, January. Apple reported the market sold off, right? And this is because the market was at all-time highs. This is my whole point. When markets are at all-time highs and moving straight up, that's when you get more risky. Things are a lot riskier because valuations are up, not just valuations, but the stock market's up. Okay, that's why you have these big retracement, all-time highs, boom, crashes, right? All-time highs again, and the market crashes. I'm not saying that you can't crash, right? You only crash at all-time highs. It's just the probability is investors are already positioned overweight. Therefore, they're like, okay, guidance is lower. Let's come back later. In this case, today, the case we're looking at today, there's a lot of cash on the sideline. Keep this in mind. There's a lot of cash on the sideline. And investors are, especially fund managers, they're looking for a deal. We're down 10%. We're in a correction territory, right? We're in correction territory. So they're going to start nibbling in this correction territory. We already dropped the 200 moving average. I get it. But unless something systemic comes in, I think we're good here. I don't see earnings guidance. Oh, what up, Scooby Dooby? You're back. Scooby Dooby is back. Wait, no, you're not. Okay, I thought you were Polar Vortex. Polar Vortex is the guy. I wish he would come back who threw a fit and said I was a scammer because I'm pro Bitcoin, pro Tesla. Anyways, he always does a good thing. I wish you guys would jump on YouTube. So anyways, we're not at all-time high. So the market can recover here, right? Could we drop here? Sure. But if we drop here, that would be the Fed raising rates again or communicating we're going to keep raising rates. This would be wage inflation coming back. This would be maybe you see recession start to pick up while the Fed raises rates. This would be you see, we can go thing after thing after thing. Maybe it would be consumers stop spending, but they're not going to stop spending yet. They're due to decline, but they're still positive. So you can, by the way, if you know anybody who wants to debate on YouTube live, I will debate you. Okay. I'm open to that also. I will do a debate. I'm not scared to say my opinion, to give my opinion in public and back that opinion up and be wrong. I'm not afraid to be wrong about it. Nobody's ever always right. You could be overly cautious. I'm just more optimistic and, crypto is moving higher. So there is a bull market somewhere. Okay. There's always a bull market somewhere. Anyways, getting back to it, my point was when you're at all-time highs, you have more risks. But when the market's down 10%, and earnings guidance isn't great, but it's still positive. You're beating earnings from the first and second quarter. By the way, earnings are still better today than they were in Q1 and Q2. So this is a sell the rumor, which is that earnings are going to be negative, that earnings are going to fall apart. They're going to collapse. Sell the rumor and then buy the facts. But you got to wait for the facts to come in. When do the facts come in? When Apple is done reporting, when Nvidia is done reporting. So this move up is going to need the macro, which is employment, housing's in recession, employment, rates, Fed, all those things, right? Interest rates, 10-year yields, those need to stay paused. Those needs to stay soft. Oil needs to stay soft, okay? But if it does stay soft, markets go higher. If it doesn't, then yes, you get, you maybe turn sideways, but a bear market to sell off back to the lows, no. You need the war to accelerate. You need oil to spike. You need the consumer to really start to barf. And we're not seeing that yet. Oh, well, what about commercial vehicle? Look, there's a lot of rich people in the economy that just keep spending. That's the fact. They can outspend, for every rich person, they can probably outspend 100 broke. I don't want to say the word because I'll probably get kicked off. Broke people. So anyways, we got Scooby Dooby. BYD killing it, and they aren't even stateside yet. Yeah, BYD is killing it. They are killing it. So they're doing pretty good. I mean, that doesn't take Tesla's share away from Tesla in the U.S. It's just in China, right? which is the fastest growing economy anyways when it comes to the EVs market, right? Electric vehicles, they grow pretty quick. Consumer, and there's a lot of vehicles that need to be transferred over. So I think they're going to be fine. Consumer recessions are always worst case scenario. Soon people will come to terms with it. Yeah. What else we got? Break above the 200 weekly moving average and keep it as support, reject and crash. Yeah, let's throw that 200 on there, see what it looks like. So I still think the NASDAQ is also leading the rally. Let's take these off. The NASDAQ, I think, is going to lead as we did last time. And taking a step back, let's go to the NASDAQ. Okay, let's look at now. This is S&P. There's a lot of weak stocks in the S&P. And I think, too, if we look at how many stocks are moving above the 50-day moving average, it's funny that we're making new lows in the S&P. Okay, check this out. New lows, right? We're hitting new lows in the S&P, but there's less stocks hitting new 50-week lows. 52-week no, not 50. Okay. There's less stocks moving below the 50-day moving average. It's a tongue twister there. So what does that tell you? Market breadth is actually improving as the S&P makes new lows. Okay, I got you. Carbides. Beating lower guidance after lower guidance is weak. Beating lower guidance after lower guidance is weak. At one point, people will buy, but this week's data is very important. Yeah, I think it's all macro. I know people are like, oh, earnings, and that earnings is important if there's significance, but the macro is what matters the most. Is inflation coming down? This narrative is not going to stop. Is inflation making progress? And is the Fed done hiking? Those are the two biggest questions. And oil, right? The biggest commodity on earth is oil signaling further risk. Not yet, right? Not yet. 10-year yields are the biggest headwind right now. Long rates are the biggest headwind for the market. So we need those to peak. As soon as they peak, market's going higher. My guess is rejection and doom. Oh, also, inflation is rebounding. Scooby-Dooby, where? See, I love this debate. Where is inflation rebounding? Give me the data point. Don't just say inflation is rebounding. People just, inflation is rebounding. Where is the data? We're not talking about prices. Prices always go up. Inflation is the rate of change month over month. Inflation is the rate of change year over year. It is the rate of change of prices accelerating or decelerating. Where? Where is inflation going higher? All right. Where are we at? I was pointing out that, I think I was trying to point out that, damn. Oh, yeah. 200 moving average. So taking a look at the Qs. The Qs are bouncing. This is INDX. This is the NASDAQ index. You can also look at the Qs. Most of you guys probably look at the Qs. The Qs are still holding the 200 moving average. And the Qs pull most of the earnings anyway. So what does that tell you? That we pulled into the 200. Maybe we retest it. It's not over yet, right? But we're still holding the 200 moving average. S&P not as much. But the S&P does hold a lot of companies that are more interest rate sensitive. They don't have as much software. They don't have as much tech. They don't have as much power, pricing power stocks or companies that can thrive in a slowing environment that don't have to do with the consumer. Have you bought the dip? Bukowski, yes, I bought Tesla today. I'm a little nervous, but I did buy some Tesla today. I'm not buying S&P. I did buy some Tesla at 200 once it broke out. I could have got it lower, but at this point, I'm like, all right, bro, you need to wait for confirmation. So I needed to wait for some confirmation on Tesla. All the Tesla haters are licking their chops. They're excited because Tesla's getting smashed. But technically, it'll come back up. Inflation came in at 4%, hence the yields going ham. So inflation, are you Scooby-Dooby? Are you speaking of headline inflation or core inflation? So we have somebody on TikTok saying inflation came in at 4%. Let me just, I wish you would say this on TikTok, on YouTube. 4% inflation is what he says. Headline or, okay, so let's look at the real data. Let's look at the data here. And then when people get disproven, you know what they do? They say, well, I don't trust that data. So let's jump over to the data here. He says 4% inflation. And I'm asking him if he means headline or core. There's a bunch of measurements of inflation, by the way. sold ARK, bought SPSX. I've never even heard of SPSX. What the hell is that? Equal weight? Not sure what it was weeks ago prior to bond yields moving higher. Oh, okay. You're not sure what it was. I'll find it for you. Let's go. And so if you're on this site, Trading Economics, this is a resource for a lot of you guys. It shows you the calendar. It's going to be up to you to determine what is important and what is not important. You can actually mark it up here. I'm over here. I don't even get paid by them. I should tell them. You can put 3 stars just to get rid of most of the noise. And then you get like all the highlights, right? Whatever. Anyways, what's important here is core inflation. Okay. So this is what he's most likely speaking of. Okay. He's speaking of core inflation. Now, let's be clear here. Let's go to inflation in general. Okay? If he's speaking of headline inflation, Scooby-Dooby, jump on YouTube. We're showing it here. Headline inflation, guys, look at this. Headline inflation is not at 4%. Did it bounce? Yes, it did, and it moved sideways. Okay, it's moving sideways. It's not at 4%. So he's not talking about that. Okay, so he's not talking about headline. Let's go to core. This is core. Is he talking about core? Yes, he is. Core is at 4.1%, Scooby-Dooby. But here's the thing. Here's the tricky thing about math and models in your head that you got to understand. He said that it is bouncing. But if we take a look at the data, what do we see here, guys? 4.7, 4.3, 4.1. So yes, it's at 4%, but it's coming from a higher level. It's decelerating. It's decelerating. Where's my I think I'm sure Scooby-Dooby is not a wuss like the other guy who threw a fit. So when you say inflation is reaccelerating at 4%, here's what I say. Stupid. Okay, I'm just having fun. Don't take it personal. Don't turn into you know who. All right, so yeah, inflation is not reaccelerating. You could say that it is, the headline is a little bit because it bounced, but inflation doesn't go straight down. As a matter of fact, we had the longest falling inflation of all time. It fell for 11 straight months on the headline, and it bounced and it got up to 3.7. Okay, and then now it's been sideways for 2 months. Well, you guess what's driving this? Housing and shelter. Those are falling. Guess what? Even held shelter up. It was lodge away from home. It wasn't home prices. It was lodging away from home. Okay. So the other component is oil. Well, what is oil doing? We just looked at it. Oil is falling. So the next print is going to be lower if this maintains. Maybe I'm wrong. I don't know. But this is what my guess is. Even if it goes to 3.8, it's a small increase. The momentum is lower. So that's proving you wrong, Scooby-Dooby. Thanks for playing. I made money on Tesla 197 puts. Congratulations at 360, 445. Congratulations. If you're make more than you lose, that was if you shorted Tesla, congratulations. That was a good short. I'll always give you the value or give you what's due. Can't even talk right now. Always trying to stay clear about what we're saying. What are we looking at here? What is this? Oh, that's a wrong thing. Okay, no wonder. All right, so anyways, what do we got next? Not sure oh. Look at bond yields. Okay, hold on. Look at bond yields. And if you guys have comments, let me know. I'll look at what you're saying. Look at bond yields. When they moved up, it was a bad inflation number. But it's not reaccelerating is what I'm telling you. And guess what? Bond yields didn't move higher. This latest data, bond yields didn't move up. Let's go to bond yields because I talked about this. As a matter of fact, I have this slide in my slide deck. Let's go to the slide deck. Let's go to the slide deck here. Okay, bringing you the #1 macro data. I am biased too. I'm bullishly biased. So it's not like I'm like, oh, guys, it's going higher no matter what. No, I'm just giving you the data. Where the hell is that? Oh, here it is. So these are bond yields, guys. This is TLT going lower and bond yields. They're literally inverse of each other, okay? What did we get this past week? GDP, hotter than expected. Consumer spending, hotter than expected. 1 year inflation expectations, hotter than expected. PCE, the Fed's preferred inflation gauge, month over month, hotter than expected. Bond yields did not make new highs. So I would argue bond yields are not reacting the way they did. It'll come down to this next week on the inflation report, right? But even if you go, because I know you said 4%, even if you go with the Fed's preferred inflation gauge, core PCE, so guys, if you're just learning here, The Fed is looking at core PCE. They're not looking at headline, okay? They're looking at core inflation. The difference is core, you take out energy and food because they're volatile, right? Has nothing to do with what you pay. This is what determines how the Fed makes their decisions about interest rates, which impact in context the stock market, not your spending habits. We're talking about the stock market. This is why you invest, okay? So core inflation, okay, you look at core. What are we at? 4.1%. Okay, well, let's look at the Fed's preferred inflation gauge, which is personal consumption expenditure, okay? So PCE, why can't I find it? Core PCE. Here it is, core PCE. No, that's not it. That's the index. Whoa, that fell off from April. Wow, that's a big fall off. But where's core PCE at? Why is it so hard to find on here? Core PCE. Am I blind? Core producer prices. This is okay. Well, we can look at quarter over quarter. Core PCE quarter over quarter is at 2.4%, right? So there's a lot of ways to measure it, but for the most part, a lot of them are falling. This is core. I think this is like super core, 2.7%. Core is falling. This is what the Fed's focused on. That is actually falling. This is why I'm still optimistic. This big sell-off was, I think honestly, if the war didn't break out, I think stocks would be higher right now. But the war is putting another risk factor on the table, which is kind of exponential. It's not like, oh, +1, -1. It's like, oh my God, freak out, sell off, and now the prices look pretty good. So my point was, bond yields are not responding today as they were before. Let's see what else we got here. So inflation is rebounding, but it's not. Why are yields moving up? There's a couple of reasons why yields are moving up. Look, Scooby Dooby, I wish you would go live with me so I could hear what you're saying, because I disprove you and then you say the same thing again. Okay, why are bond yields moving up? There's a lot of reasons bond yields are moving up. Number one, the freaking U.S. Treasury. This isn't even inflation. This is the U.S. Treasury issuing $1 trillion of bonds. The more supply you put on the market, the higher the more supply you put on anything, the lower the value of it, right? You lower the bonds. The more supply of bonds, it's just like the dollar. When the Fed prints money, guess what? The dollar loses value, and what goes higher? Asset prices, right? But in this case, when you print more bonds, more treasuries, more U.S. debt, okay, when you print more debt, the bond value goes lower. That automatically pushes rates higher. So Treasury issuance, which is coming tomorrow, Janet Yellen's going to announce, this might push rates up again. Treasury issuance moves rates up also. And then the bond vigilantes are shorting. They're going to short the bond market because they're like, well, shoot, if you're going to make prices go lower, we're going to short the prices also while you make it go lower. We're going to short them at the same time, right? So it's not just inflation that makes bonds go higher. There's a lot of other things, or rates go higher. There's a lot of things. And also the Fed, if the Fed is done, if the Fed hikes again, that could push rates up higher for sure. If it's coming down, why are yields moving? So I kind of answered that. What up, D Taylor 760? Doesn't oil go up in times of war? Not always. It goes up if it goes. Typically it does, but right now I think the way that wars are fought are not just tanks and airplanes and ammunition and all this right away. A lot of it is cyber. So if we do have to go hard war, right? If we have to do hard war, then oil will go higher. If we have to push out tanks and jets and airline, we're not in all-out war, for one. First of all, I got to watch how I say this because I don't want to get banned. Stupid TikTok will ban you. And I appreciate the likes if you guys are supporting on there. If you guys don't mind, if you're new, go ahead and check out the YouTube channel. Have all the long form stuff that you can revisit the video on. I try to put timestamps as much as I can and sub so I can get to 1,000. I'd appreciate you guys. Anyways, yeah, so oil will go higher, D Taylor, if the war materializes significantly. But right now it's not, because we're supplying more oil and the demand in the U.S. is falling. So it's not going up. Now, what would make oil go higher? If Saudi Arabia, well, I don't think they're going to do it, but if Iran starts joining the war, if you get Iran and you get, who else do you have? It's basically Iran. If you get Iran, Russia, China's not going to, listen, they're not going to join the war. It's cost too much. It's all, the wars are basically economic. It's all about expending your enemy's like the Cold War, expending the enemy's resources. That's how you win. It's not an all-out blitz Krieg anymore. This is not World War II. So now it is cyber warfare. Now it is, it's technology. It's all about technology. So I don't think that's why the oil price is not spiking. It could spike, but oil is telling us that the war is not at that critical level yet. So if inflation is rebounding, but it's not, okay, we're answer that. The 10-year has moved up. Yeah, it has. Brings up TLT instead of the 10-year. TLT is the, by the way, TLT is the inverse of the 10-30 year. It's the same thing. It's the inverse. Just to give you a heads up there. Inflation up, earnings projections down, government shutdown looming. Oh yeah, government shutdown. That'll put some pressure on sentiment, but it's not going to be imminent because government shutdowns don't follow through. The market's going to see through this as usual. These are some weak arguments. Come on, give me a real argument. So who do we got here? TLT is weak. Distribution in full effect. It looks like a bear flag forming. Ooh, if TLT does break down, that means rates are going higher. I mean, it's literally rates going higher if it breaks down. Here's the other part too, and I'm not saying it has to go up. It's going to come down to the reaction. It looks like it's going to roll over. It needs to break out or roll over. You have bullish divergence. So what gets TLT lower or higher? I'm sorry, because obviously if it goes lower, that's going to be inflation. Ramps up. We thought that the war was actually going to cause rates to ease, but right now it's kind of like, it's funny because it goes both ways. Oil is telling us the war is, oil is easing. That helps the market because the war is not at that magnitude yet. But if it is at that magnitude, treasuries go higher, yields come down. So it's like what do you want? Higher oil or higher treasuries? Really none. So you're almost in a stalemate. You're in a stalemate here. It comes down to earnings and Fed. There's a lot of factors going into this. I'd almost want to say that rates going higher, a little higher, the bond yields are better than oil going higher. Rates going higher are worse because if rates go lower, then valuations improve, the dollar comes down, and then if oil goes up, I mean, it's not that terrible because Fed is focused on core. It also makes the dollar go lower. So it's a stalemate, but I would say it's better if things just move sideways at this point. What else we got here? Oh, my bad. Let me answer you guys' questions. Oh, Scooby Dooby? Oh, I thought you wanted a debate. I'll bring you on. You almost have 1,000 followers. Let's see. Anyways, getting back to it. The question about whether inflation is making meaningful progress at the current rates is the weight keeping the markets down. Yeah, that's the question. Maybe tomorrow will turn. What'd you see? Oh, TLT. Yeah, that's unknown. That's an unknown. We just have the bull and the bear case. It was accumulating, but it's got sold off hard today. Yeah. What could have sold it off today? What did we get? What data did we get today that could have sold it? It was the housing data. I think we got housing data today. For rates rising up a little bit. Let's go to the housing data. And here you could just go to, go to the calendar. Always go to the calendar so you can see where you're at. So today, nothing too significant. Actually, we got the China PMI came out. It's hovering above 50. Let's take the impact to 1. So today we had the employment cost index. Okay, so wages went up. This is probably why employment wages went up a little bit. I mean, it's back where it was. It's not like accelerating, but employment cost index wages quarter over quarter up. Market didn't like that. What is this? Benefits? I don't even know what that is. Employment cost index month over month as a whole went up a little bit, but you see it can go up and come down. If it keeps going up, yeah, it's going to be bearish. Case-Shiller home prices up for the 1, 2, I guess that's 1 month in a row, but it's been moving up, so that put pressure on rates. Housing prices are still rising, but at a slower rate. So this is probably what got rates up a little bit, which got bonds down. This is probably it. All right, so that's the answer to that. Let's get back to these charts. Oh, we're already at an hour. Damn, I wasn't supposed to do this long. It's all right. We got questions. Okay. We got a lot more TikToks. So inflation is oh wait, we already went over that one. Let's just talk through this stuff then. Let me put up the S&P. I'll throw the chart up if I need to. Inflation is up. So DMU says inflation up. No, it's not. Inflation is easing. Earnings projections down. They are. It depends on what sector you're looking at. So earnings were due to be very bad this quarter, and they're not as bad. But looking forward, that is in question overall. So most of the S&P earnings projections are flat or worse, which is pretty bad. But the S&P is carried again by the Mag 7. So I look at the NASDAQ. You're right about the equal weight. The equal weight sucks. But again, a lot of people don't have inflows. There's a lot of, stocks are so sold off. You guys got to keep this in mind. When the market is sold off to lows, so if you look at the equal weighted average, if you go to NASDAQ, the earnings projections are not falling, bro. The earnings projections are falling for some of the Dow companies, and mostly IWM, okay? And you see it. It's at the lows, right? It's at this range now. This broke down. It's at a range. And what I'm telling you is that markets, for a lot of the time, people, what they I want to say they don't factor in. It depends where price is. If prices are at the lows, okay, and earnings are projected to go lower, then the market sees the end of the cycle, right? The market's looking to the end of that. And we really need the Fed pause. That's why this data is so important. So don't get hung up on, oh, well, earnings projections are lower for all these small companies. Look, Apple's literally bigger than this whole index. So it really comes down to Apple's earnings, which is why we talked about that earlier, right? So if you're invested in the Russell, yeah, you're right. The Russell's looks treacherous, but sentiment is so negative, you might not get that reaction. You might get the opposite. TLT is the 30-year bond, not the 10-year. Well, TLT is a mix. It's a mix of 20 and 30-year bonds. It's still long rates. 10 years considered long rates. It's not we're talking about decimal points here. It's not that much of a difference. You want to be super technical, it doesn't change anything. The 10-year dictates the 30-year fixed mortgage 30-year fixed mortgage. I mean, it doesn't, listen, Scooby Dooby. The TLT is the inverse proxy for interest rates, for long rates, period. You're not gonna argue that, bro. You're gonna go into little details. It's still the same concept, right? You're just arguing to argue, bro. Come on, everybody knows that. The TLT is your best proxy for the long bond market, which is inverse to the 30-year yields, period. I mean, what are we saying here? The 30-year fixed rate moving over 8% last week. Yeah, you guys are reading too much Twitter. What also happens when you print money as well, inflation. Well, that's if the money you're printing, and I always have this argument, printing money is not inflationary. What's inflationary is is demand exploding with no supply, with no production. That's what's inflationary. Also, and how do you get that? If the Fed prints a bunch of money and it sticks at the banks, it's not inflationary. Okay, and I always try to tell people this. If they printed money. Okay, let's go ahead and look at the Fed's balance sheet here. This is, I guess, a lesson for people. Okay, so the Fed printed money from 2008 is when they started. Okay, here you go. Here's your chart. Look at this big move. This is when QE first started. From 08 all the way, and it got flat here, all the way till December 2014, QE was basically on. The money printer was on. There was no inflation. So why? Because it's not inflationary unless the banks are lending it out, at an exorbitant, at a crazy rate, unless it gets stuck at the damn banks. Okay, the banks have to lend it out to people who can't pay back or people who are not producing. So it comes down to production. It comes down to lending. Number two, if you give direct stimulus checks, that's inflationary because there is no production. There's not enough supply. You're just giving straight demand, right? That's inflationary also. But a loan, printing money is not. That's a That's a misrepresentation of quantitative easing or of QT. If it was, well, why does the Bank of Japan never have inflation? All they do is print. They're literally the most indebted economy on earth. But you guys can't answer that because you just hear the narratives on social media. Print means higher inflation. Blah, blah. Bro, it's way more complicated than that. What's a good analogy? Lying is always bad. Okay, well then, and I want to be careful how I say this. Lying is bad. It's black and white. Lying is periodly bad. Okay, so you want to tell somebody where you live. If they ask you where you live and you give them a lie, well, you don't want to tell everybody the truth is my point, right? That's not the point. The point is just because something seems like it's always bad, it's all about context, right? It's not black and white. It's the context of the situation. So printing money is not directly inflationary. It depends how that money, comes into the economy. So you're wrong. And I'll debate you. Rates need to go up. Detailer 760. You mean like bond yield? Yeah, they probably do. Look, the more that the Fed prints, the more the U.S. Treasury creates more treasuries, typically rates go higher. Okay, so why do rates need to go up though? Detailer 760. I'm asking. I'm genuinely asking. Why do you think rates need to go up? I'm not saying they do or they don't. The 2-year and the 10-year, Scooby-Doo. The 2-year and the 10-year are bonds to look at, not the 30. Okay, well, Bill Ackman, they're short. Bro, I don't even know where you get that. The 2-year and the 10-year are the bonds to look at, not the 30. Okay. The 30-year literally determines mortgage rates. It's the 30-year borrowing rate, bro. I'm sorry, you're just wrong. You can't look at the 30-year. Oh, where do you get this from, bro? Primarily, the benchmark rate for all rates is the 10-year. Okay, the 10-year is the benchmark. The 2-year is believed to be the closest to the Fed funds rate. Okay, but you still have 1 month. You still have 1 month, right? 1 month rates, 2 month rates, 3 month rates, 5-year rates. There's a bunch of rates. It's a yield curve. So you have to say exactly why. You can't look at 30-year rates. This is the one that is surging, actually. 30-year rates are the ones that have been surging even faster than the 5-year lately. It was 2-year at the beginning of the year in 2022. It was the short-term rates. Now it's the long-term. So this is what people are shorting, the 30-year rates. Anyway, so I don't know where you're getting that from, bro. Japan market is up, but currency is down way more. Is that what you want? Currency down, Japan market up. Well, it's not what I want. I'm just stating a fact. The fact of the matter is you don't get inflation from just printing money. That is the fact of the matter. I'm not saying what I want, how it should be. It has nothing to do with what I think. That's just the reality of it, Demiush. Oh, CrowdStrike, CRWD. CrowdStrike, is it looking good? Yeah, this is a cyber company. This is cybersecurity, right? You need cybersecurity, especially in these demographics and this age. So this stock can do what? Like, I don't know the demographics. I don't know the fundamentals of CrowdStrike, who they're competing with, but obviously price is telling you that they don't care about consumer spending. This is all business spend, right? This is all government spend. They're going to do well. They don't care about rates because they've probably locked in low rates already. And number two, there's demand for the product. So stocks like this don't care about your bearish macro. You need a black swan. Obviously, they just don't care. What is it up right now? CrowdStrike. Hey, that's a good call there, CrowdStrike. Like, always look for a pullback though. Up 113%. Yeah, just don't care. Who's another one? Meta. You think Meta cares? You think Meta cares about rates? Hell no. Meta cares about earnings, and their earnings were they were good. Meta had good earnings. Okay. It's all about the business model for these companies. Amazon, where's Amazon? I haven't even looked at it. Amazon is capitulating. Okay, Amazon, I see you. Amazon's starting to capitulate. Okay. Here's the other thing. Why the hell is crypto breaking out? Oh my God, why is Chainlink up 100%? Right? From May of 2023. Actually, it's more than 100%. If we go all the way back to the lows, by the way, we called the lows. We didn't call the lows. We just bought at the lows. 142% Chainlink is up. Why is crypto up? You guys on here are hilarious because you're just saying the same things over and over. And hey, I'll always, I'm not trying to say you're stupid. I actually appreciate you guys coming on and sharing your ideas. I appreciate you coming on and creating a debate. I respect you for that. Some people hide, they just, talk in the background. So I'm not saying stop doing it. I'm just passionate about what I say. Common sense, like let's just use common sense here. Why is crypto up? Because crypto already sees spending into the future. You guys are right. The government will keep spending. I agree with that. They're going to have to keep spending. And guess what? Everybody thinks, oh, well, more spending means the economy collapses. No, it doesn't. More spending, it depends how that spending happens, number one. Number two, you need inflation to pick up to really be a bad market. You need inflation to pick up to significant levels. That is not the case. Shelter is a third of inflation. Shelter is rolling over. Housing prices are not going up, guys. Why? Because the housing market is frozen, because rates are too high. So housing is not going up. Nobody is buying housing. It is frozen. If they cut rates, you get more supply of housing. Existing homes and new homes. The home builders start building, prices actually stay flat or go lower. So that's not the case. Okay, what about cars? Cars inflation it's up right now, but going forward, it's lower. Even electric vehicles, well, you look at Tesla, they're probably the only ones cutting tremendously. So, and oil, right? These are year over year metrics. So I don't know what the hell you guys are watching where inflation is ramping back up. That is not the damn case. It's just not the case. This is why I do this channel, because you're being fed the wrong information. And you just believe it, right? Don't take it personal, but you just believe it because it fits your narrative. But you got to look at the damn data. We just looked at the data. Inflation is not re-accelerating. If oil spikes, sure. If home prices start to spike, sure. But where's that going to come from? The devil's in the details. It's not just because it should, because I have recency bias, because in 2008 and 2009, this is not 2008 and 2009. This is a new market. Things are much different. The Fed communicates every single week. They've never communicated this much in history. The markets change. It's hard. It's hard. The markets change. Anyways, that's my spiel. Just scalp and sell. You'll see. Just scalp it. What else we got on here? And I'll never start. I won't skip you. If you guys have, you guys want to talk smack, I'm not gonna skip your. I'm not gonna skip your stuff. Hey, I want you to challenge me. I want you to tell me where I'm wrong. I'm cool with that. I played football. I've done much harder stuff than this. I used to work with kids who cussed me out. I was a special education teacher for emotional disabilities. You ain't gonna hurt my feelings. Give me all you got. Gaza war be done soon. No way Iran stepping in. If that is true, the market's gonna go bullish. If that's true. If there's no way Iran steps in, and again, you got to weigh it out, right? It is very volatile. Is Iran gonna step in? Are they not? What's gonna happen? If Iran doesn't step in, the market's going higher. Period. If they do, if it accelerates, then yeah, we're in trouble. Yasin, yo, bro, since it's Halloween, is that why DXY went up so much? Because it's Halloween, bro. Come on, man. No, DXY, the dollar went up today. I believe we just went over the data. I think the dollar went up today because the employment cost wages quarter over quarter were a little higher. Okay, a little higher than expected, which means wage inflation. Okay, even though the real wage inflation comes on Friday, this was just it's intermediate, it's coincident data. You have all kinds of data, and guess what? A lot of the data has been wrong. So that went higher. Case-Shiller home price index, which your home price inflation went up also, but it's at 2.2%. That's historically low levels. Yeah, so that's why yields went up a little bit. It's being carried by the dollar. Also, tomorrow's going to be a big day. You guys missed it. You need to go back to the beginning of the stream, Yasin, and listen to what I said at the beginning, because these next couple days are huge. Tomorrow's the biggest day, by far has the most macro data in it. Tomorrow is ISM PMI, right? Manufacturing cycle, job openings, tax loss harvesting ends. I think selling starts to slow in the S&P. Fed decision tomorrow. Guidance going forward. Is there a December hike or not? U.S. Treasury refunding. How big is the size of the U.S. Treasury, the debt market, and where are they targeting the 2 years? Are they targeting 3 months? Are they targeting the low end of the yield curve or the high end, or both? Or what does it look like, right? What else we got? Always stick with top 7, but sell off right calls on the greens weeks, off price targets. Oh yeah, big man knows what's up. I'm positive on the market. SPY did decent, not bad at all. SPY actually did great. Tesla bottom might have been bought. I don't see it losing 180 if the rest of the week is so good. If the overall market still picks up, Tesla's done. It's going to squeeze all the shorts. There was some news today, but damn it, I couldn't get to it. Let's see if somebody posted that news. Uh, it would be Gary Black. If you want to see Tesla news, follow Gary Black. He is an institutional investor. He's always tweeting about Tesla. I think Google and Tesla are his two biggest positions. Let's see, what did he say? He says, well, I guess he didn't say it. Basically, today, there was something with regulation. Look into it, because this could be a huge catalyst for Tesla. Something with the regulators. Number one, there was Tesla got sued for full self-driving. That case got overturned. Number two, the regulators, I think, are passing them. The stock would pop more if that were true, so I think it's kind of like too early to know, but something with regulation, that's going to full self-driving, if that comes online, Tesla's headed to all-time highs. QQQ all-time highs coming. Jet Hita, what a name. I don't know, bro. I was thinking all-time highs by the end of the year, but I am less optimistic about that now. I still think we have a Santa Claus rally, but I'm less optimistic because that would be a huge rally if we get it. This would have to be a huge Santa Claus rally if we do get it. You would need the Fed to confirm the pause. You would need bond yields to peak. You need the dollar to come down. You need oil to move sideways. You need earnings picture to be positive. You need the war to end. That's a lot of variables to go to all-time highs. But if the war does end dramatically, that could take us there. That could take us there because it also means less fiscal spending, and the market is pricing in more fiscal spending, which means higher rates, more debt. So if you take that off, if the war ends, less fiscal spending, not as much as we thought, rates ease, markets go higher, period. There's your bull market all-time highs. Would you say, Scooby-Doo? 2-year dictates Fed rates, 10-year dictates fixed rates. It really is that easy. 2-year dictates Fed rates? Okay. I mean, fixed 10-year dictate. I would say, yeah, the 10-year benchmark rate. But that's in normal conditions. These conditions, there's literal traders shorting the 30-year, not because of the economy. They're shorting it. They're literally shorting the 30-year rates, bro. So in a normal environment, you're correct. 2-year dictates Fed rates. It doesn't really dictate it. It just kind of correlates with it. 10-year is the benchmark rate to fixed rates, right? I agree with you. But 30-year rates, I mean, duh. 30-year rates, 30-year mortgages. Higher rates equals discounted future earnings. 100%. 100%. Jeremy, have you noticed that you arguing much more with your audience than agreeing? I rather argue with my audience than agree. I don't want a bunch of people that just agree with me. I don't think it makes for a good. I don't think it makes for. I mean, if you don't have disagreements, how do people learn? You just agree with everything. You got to learn something, right? So, I don't know if that's a plus or a minus, but I really don't care. I rather it's okay to be arguing, right? I want to be criticized. I want somebody to criticize me, but with good evidence, not just because. Right. So I like to argue also. I like to debate. So that's part of my personality. What do we have here? Oh, Bukowski. I read that manufacturing is rebounding due to restocking cycle. Probably also the global manufacturing cycle is also picking up, led by China. And we'll see tomorrow. The ISM comes out. We'll see if new orders are still picking up. If we get an expansion, I think crypto breaks out. If the ISM PMI goes up, because crypto's the riskiest of assets. And if the ISM prints higher, if it starts expanding, that's more liquidity. It looks like AMD is creating a round bottom with a lot of volume in after hours. Let's see what that looks like. I haven't even looked at AMD. We have to turn off the, let's go. Yo, why does it disappear like that, bro? Let's go to the 30-minute chart. There we go. Extended hours. Is it bottoming? Oh, shoot. AMD rebounded. Nice. See? So I think we're going to bottom. Maybe I'm wrong, guys. That's just my opinion. I'm going to share it with you because housing is still insane. Housing prices aren't, it depends where you're at. It's actually regional. The 10 determines mortgage rates, not the 30. The 10 is the benchmark rate for U.S. Treasuries. So tell me, what does a 30-year determine then? 30-year just exists for no reason. Maybe you're right. I don't think that's the truth. I could be wrong. I thought I thought rates needed to go up for housing to go down. Rates are up. This is the highest increase of rates in history, but I don't know much about it. Yeah, people just say stuff. Rates are already restrictive, which means so the Fed increases rates at a high level. When rates are above inflation, that is putting pressure on growth. So if inflation is at, let's say, 4% and Fed funds rate is at 5%, you get a 1% cushion. It's not a cushion, but you get a 1% pressure, which means you have 1 percentile higher of rates versus inflation, and that should push growth lower. So right now we're in restrictive territory. You got 1% of restriction. It's actually more than that. I think it's like 2% restriction. And basically home prices will decelerate, but homes are the most lagging indicators. Home prices lag. If you look at Zillow prices, they're falling a lot faster because it's real-time rents versus shelter measured by the Fed is a lot more laggy. So really home prices are coming down. You just don't see it because it takes a while because people have to refi every 6 to 12 months when it comes to rents. And then housing, there's just not enough supply. But people have to lower their housing prices because nobody's buying. So those will come down. It's just it doesn't react immediately, right? The housing market is a very slow reactor. Did inflation go up month over month? Yes, it did, but use the year over year by all means. Which measurement? Month over? Are you talking about month on month? I mean, I already talked about the month on month. The PCE was hotter than expected month on month. We just showed that slide in the YouTube. PCE headline was up month over month, and yields did not move higher. So there you go. If dollar goes up, shouldn't crypto go down? Yes. It depends how fast the dollar moves. Okay, so but that is true. The dollar and crypto are inversely correlated for a lot of reasons. If the dollar spikes, crypto is going to fall. If the dollar creeps up, crypto needs a catalyst. It could move up, could move sideways, could move lower. If the dollar falls quickly, that might have something to do with more liquidity. And crypto is mostly tied to liquidity more than anything. Good morning. Gold up. I think gold is up. I haven't really checked gold. Let's see. Gold is trying to also sniff out more stimulus. Yeah, gold is bouncing. I just don't think gold, I could be wrong about this, but I think gold's losing its narrative. Everybody wants gold to be bullish. I think it's an old, I don't know, man. I don't know about gold. No way, just because the news we pushed up so much. Well, rates are pushing it up. So 30-year, 10-year rates, right? According to Scooby-Doo, 30-year rates, you don't have to ever look at them. But 30-year rates are at 5%. And the reason I point those out is because they've been moving up faster than the 10-year. The 10-year is at 4.92, 30 years at 5.09. So the 10-year is about 20 basis points, or 200. Is that 200 basis points higher? Yeah, it's about 200 basis points higher than the 10-year, which means 30 years are high. But that's a normal curve. That's actually normal. Fed is hawkish tomorrow. Market is not going to like it. I think the Fed does come out hawkish. A hawkish pause is what I'm thinking. You think Halloween really had no impact? Halloween, no, I don't think Halloween has anything to do with it. Most of the spending for Halloween happened already before. So no, I don't know. How would Halloween have an impact? I don't see it. Housing prices are not crashing due to low supply. Rates are going, yes, low supply, exactly. Rates going up. Well, housing prices, yes. Rent prices are falling because there is more supply for rents, right? So housing, yes, that's a weird dynamic. Rates going up doesn't necessarily mean lower prices. When supply increases, prices will go down. True. Supply can come from sellers or builders, 100%. Thanks to Josh, I learned this info very well. Yeah. Where is Josh at? Where you at, Josh? We'll see where Josh is at. Oh, look at, we got anybody. Look at, you guys got some viewers. You want to challenge me to talk smack? Keep doing it. You're just gonna look like a fool. If you try to be stupid, look, if you make sense, you make sense. I'll give you your credit. But if you don't make sense, and I'm not trying to bully nobody, go ahead and jump on. I'll debate you in real time. Most people like to talk behind a screen, but they don't want to do it face to face because they don't really have any balls. They're just saying it, right? Because it makes them feel good. They had a bad day. They don't lift enough weights. They don't have a good diet. and they need to get their anger out. So would you put 30K into Bitcoin or Tesla? I would say hypothetically, if I only had 30K and I didn't need it for nothing else, I would go 50-50 for Bitcoin and Tesla. I'd go 50-50. Tesla, yeah, 50-50. I think Bitcoin goes to 150K this next cycle, could be even higher depending on how the macro plays out. It's not a promise. Price targets are stupid without understanding how you get there. Tesla, on the other hand, Tesla will be fine. You want to buy Tesla when it's down a lot. So I would say I'd go 50-50. Now me personally, I would go Ethereum, Bitcoin, Tesla, Palantir, and Chainlink. Those are my big ones, but it depends how you look at the market. The 10-year, still on that 10-year stuff, huh? The 10-year is with the 30-year fixed rate is based off of people are shorting the 30-year because of it. Yeah, I mean, sure. Right now, we're not really arguing anything. You think Apple will beat earnings? I think Apple beats EPS. I think revenue will be questionable. Margins, I think margins stay in line. I think margins will be fine. And the question is guidance. The question is, where does guidance go? How does guidance look? I think that's the real question here. I think you finally explained why there were 4 houses for sale all of a sudden in my neighborhood. Yeah, I mean, housing prices as a macro are not falling, but there's certain regions and areas where prices are falling tremendously because they're trying to get rid of the house at a loss. It doesn't mean all the neighborhoods though. Just depends. But demand will go up with lower housing rates. Yes, it will. You're right, Taylor. So that's the real question. We don't know. The question is, does demand outstrip supply? Or are they even? Does demand go up along with supply, or is there more supply than demand, right? So I don't know, but the forces, here's your forces. A lot of people are going to be stuck in apartments. So that's why I think there won't be as much demand, because a lot of people are going to say, F that, let's just go into apartments, while you have home builders building a lot of apartments and now start to build houses, and now existing homeowners, they're going to move if those rates come down. They're going to want to move. So I don't know. We'll see how prices, I think more than likely housing prices don't really move if the Fed cuts rates. I don't think they really move. I think the secular trend is really changing. They're going to make smaller houses, less interest rate sensitive housing. So I don't know. We'll see. I'm not an expert on that. We'll ask Josh when he comes back. No, a lot of people don't debate because they only regurgitate what they hear. Yeah, there you go. They regurgitate what they hear. And they don't really know how to defend it. They can't defend it, or, which is fine, but you're going to get smoked is what I'm saying. You could say what you want. You're just going to get smoked. Just don't get your feelings hurt. Like, I'm not even going to say his name because I ain't trying to disrespect him, but there's a guy on here that quit. He rage quit on us. He told me, I'm out of here. You and your 10 subscribers, or your 10 commenters or something. And he rage quit because I'm bullish on Tesla and Bitcoin. Insane, bro. Insane. Like, no wonder dudes are struggling with girls. You got to be kidding me. Rage quit because it's a scam. Bitcoin's a scam, but BlackRock is buying it. But JP Morgan is buying it, but it's a scam. You guys are wrong. These dudes are tripping. I can't even say what I really think. They should make discounted apartments for young men by taking out the kitchen. They'll do something. You don't want to take the kitchen out. You want to get that kitchen to use. You know what I'm saying? You got to get her in the kitchen. Hopefully I don't get banned for that. Get him in the kitchen though. If you can't get him in the kitchen, you need to make more money. You need to be a little more masculine. I like to cook myself. Don't get me wrong. I like to cook, but if I ain't got time to cook, she gonna be in the kitchen cooking. All right. What else do we got? Okay, here's Cybertruck. Here's the Tesla Catalyst. I don't think nobody has anything else to say. Catalyst. M3 Highland launch Q4. So you get a new Model 3 launching. Bro, you didn't know that BlackRock is buying Proof? Are you kidding me? I thought everybody knew that. Yes, BlackRock is buying Bitcoin. They literally need to buy Bitcoin for the ETF. I really don't want to get into all that. That's something you could find yourself. I've made multiple videos about this. BlackRock, just look it up. BlackRock buying Bitcoin. Are you kidding me? So anyways, for Tesla Catalyst, M3 Highland launch. Okay, now the reason I have the 10-year up here because This is the most important catalyst to the market. If this thing continues higher, it's going to be a big headwind. If it goes lower, big tailwind. Highland launch Q4. Okay, that's a refresh Model 3. Looks really good. Cybertruck delivery starting Q4, November 30th is what he said. Full self-driving OEM, which is another car company, licensing deal Q4. I don't know if that's true, but if it is, it's very bullish. Stable auto gross margins. Okay, that's a catalyst. We need auto gross margins to stabilize. 7,500. Here's what people don't know about Tesla. 7,500 EV instant rebate. Bro, you go get a Tesla, you can get one under 30K. It's not going to be like the one that's super, super techie, but you can get you're going to get an EV tax rebate, bro, literally off the price. Let's say the price is 37,000. Well, you're going to get it for 29.5, right? Fed pivots on rates. I think the Fed will pivot. I think the Fed is done. I think they're done hiking. Q4 growth is set to be lower than Q3 growth was. Inflation is coming down. If you don't believe me, debate me. It has to do if oil spikes. That's a different story, but the Fed isn't even focused on headline. Also, Tesla $10 billion share buyback. Well, that would be bullish. If they buy back shares, they're going to take shares away from the market. More scarcity. EPS automatically improves. Full self-driving V12 L4 alpha release. I don't even know what that is. 25K to 30K compact car. Ooh, 2025. That's the catalyst. $300 price target, 6 to 12 months. Well, okay, so that's Gary Black. That's Gary Black. What up, Darcy Jordan? Why do people say, what's up? What's up? What's up? You know what stream this is? This is a financial education stream. This is really macroeconomics. This is kind of high level for most people. If you're a beginner, you're probably like, what the hell is he talking about? I'm making a course from bottom up, creating a course just to update you guys. Creating a course in the workings on that. I got to get to that after this. So this is technicals, fundamentals. What is the other part? Fake news. We're gonna talk about fake news. But technicals, fundamentals, macroeconomics. I mean, there's a lot of stuff. The economy, whatever it is, we're gonna go through all that stuff for you. And I'm a bull. There's a lot of reasons I'm still a bull for the end of the year, especially for crypto. I think crypto is just starting to break out. Bitcoin goes about 40. Actually, let's look at crypto. Let's end it out with that. We haven't looked at crypto. Bitcoin is pretty bullish right now. Bitcoin is very bullish. 35. Look at this wedge pattern. This was the last. This highlight is actually the resistance that it had. I don't even know if I want to keep that on there. It looks kind of. Let's just do this, right? So it broke above resistance. It's holding. It's forming a wedge pattern. If you're not familiar, wedges are the most powerful breakout patterns in the market. RSI is a little over, it is overbought, but it is coming down. So if that wedge holds up while the RSI comes down and you get more volume coming in, we'll see how that plays out. Right now, crypto moves off of liquidity. Global liquidity is picking up. Japan just removed their upper limit for yield curve control, which means they're going to be purchasing more. They're not called U.S. Treasuries. They're I don't even know what the Japanese bonds are called, but they're going to be increasing global liquidity. China's already doing it. The U.S. is about to do it. That's what everybody's looking at. And the real question is, does inflation go higher? Either way, Bitcoin is sniffing that out. Ethereum is sniffing that out, also forming a weird pattern. Ethereum doesn't have the best patterns. I am the most bullish on Chainlink out of all cryptos. I'm not saying it does higher than these crazy coins, but I think it does better. What up, Julian Gordillo. Sorry, Gordito. I called you Gordito. Either way, I can't see it just says YT. I don't know why it doesn't show the actual image, whatever you're trying to put in there. Let's see what else we got here. Larry Fink likes Bitcoin now. Get used to it. Yeah. Yeah, he's getting crypto. He actually called it a flight to quality the other day, which was very interesting. Why would equities go up? Do anyone think earnings will be better 6 months from now? That's a really good question, actually. Will earnings be better 6 months from now? That would put us in May. A lot can happen in 6 months. I would say I think if there is a slowing, here's the other catalyst they don't think about it. It's common sense psychology. The administration that we have right now is more powerful than the Fed. They can print money whenever they want. Okay, I'm not saying bet on it, but if you think Joe Biden is not going to create more stimulus for the economy in an election year for citizens, then you're not paying attention. That's all they do to get votes. So at some point, there's going to be more stimulus, especially going into election year. There could be tax break promises. Who knows? Right? Again, I'm not saying bet on it, but you got to be a fool to think. And typically markets move the most in pre-election years also. So you got to factor that in. But earnings, are they going to be better? I think they will be better for certain companies. So industrials, okay, and I'm going to tell you why. Industrials, manufacturing, possibly. Where consumers, this is a stock pickers market, so it depends where consumers and where businesses spend. And right now, it's AI, chips, manufacturing. For AI, for instance, large language models, people who are creating chips for LLMs, large language models, their earnings are going higher. But if it's for cars, it's actually going lower because rates are too high. So it really depends where you choose, what you look at. It's not a full market going high. Rates are too high. So not everything just goes up now. You have to know how to pick stocks. You have to know how to pick your assets at this point. So overall, are earnings going to be higher in the next 6 months from now? That's a really good question. I don't know. I mean, the biggest bear on the street believes so, Mike Wilson. Also, if the Fed does cut rates, because here's the thing, this is not just everything's normal and our earnings are going to be higher. You have a lot of factors, bro. If the Fed decides to cut rates or bond yields come down, automatically earnings are going higher. So things could change on a dime. That's my point. Things can change on a dime. And markets are very resilient. They've taken a beating this year, and they're still up for the year. It's cold over there. Rune, USD, Thorchain, decentralized exchange. Oh, Thorchain? Yeah, I don't know about all those. I don't know too much about them. I'll just say good luck. Hopefully they don't fail. I don't know. I'm not going to speak about something I don't understand. The administration cannot print without Congress, period. Yeah, I mean, to some degree, the executive branch has zero power to do stimulus without Congress. Well, I mean, then I guess in your case, the way you look at it is, will Congress allow more stimulus in any capacity, right? And I didn't even finish your question. The infrastructure bill, $1 trillion. The Inflation Reduction Act, $300 billion. The CHIPS Act, I don't even know how much. Either way, that's $1 trillion of stimulus that is still making its way through the economy all the way through 2025. So that's why I think earnings in some areas are going to be better. So whoever benefits from the fiscal policy, earnings will be better. SPY going to 500. So then what happens? Executive order, ace in the back pocket. I know executive orders. Who knows with politics, right? You do need Congress to some degree. That is true, but I think it gets done. I think it gets done either way. If we look at the last couple episodes of stimulus, I mean, 2021, we got a stimulus check. Most Congress didn't agree with it, but they still did it. So it depends on what Congress is going to get for it, right? You have the House, you have the House and the Senate. I would bet my chips that if the economy slows, they print. I just bet my chips on that. Even if they don't, let's say they don't, I think the Fed balance sheet comes back. Mark my words, in about 6 months, the Fed balance sheet comes back online. They start buying back U.S. debt. Oh, inflation goes higher. No, it's not. Inflation doesn't go higher. If Congress says, oh, we're not going to spend anymore, but the Fed eats the debt, well, they can't spend anymore. So the debt disappears. Their interest payments come down. More stimulus. So either way, the Fed's balance sheet either way, this is what I'm saying. No matter, if there's one thing I will tell you guys, no matter what happens, the Fed's balance sheet will go higher. The Fed will keep printing, okay? And the bear case is inflation reaccelerates. Well, with AI and all this new productivity, right, that eats up inflation. You see the deflation happening today. Apple, lowering their prices on a very high-end product. Tesla lowering their prices on the best car in the market, the most techie, car in the market. It's insane. So you got to bet inflation goes up because they will print. And then a lot of people think the Fed will not cut for a long time. I disagree with that. The Fed said in 2021, we will not hike rates again. We're not even thinking about hiking rates. It was March. It was March of 2021. They said we're not even thinking about it. 3 months later, they announce rate increases. So you have to have a reason why, you have to have when the data changes, the Fed will change. If core inflation gets to 2.5%, which I think it can get there by January, February, possibly March, if we get to 2.5%, the Fed has reason to cut rates because the U.S. Treasury, they work with the Treasury cannot afford these interest payments over time. And if they can't afford them, people think the U.S. economy is going to collapse. Bro, they're not going to let it happen. They can't afford them. The Fed eats it. The Fed cuts rates, or the Fed starts to pay the debt for them. Period. Do you really think they're going to allow an 2008 crisis? You need a black swan to collapse the market. You need something that nobody can see. That's typically what happens. GOP wanted to pay Israel aid by cutting IRS budget. Yeah, cut the IRS budget. Forget the IRS budget. What did Apple lower? Oh, shoot, I missed a bunch of them. Will Republican Congress help Biden with stimulus? The answer is hell no. Yeah, yeah, I agree. They're not going to lean that way. They're less likely to do that. Dems control the House then. Okay. Who controls the House? Yeah, you make a good point there, Scooby Dooby. You do make a good point. Betting on SPY hitting 500, then maybe worry. Earnings matter, and right now they have been mixed. True. What did Apple lower? The MacBook price. Politicians will hold the entire country hostage to get what they want. IRS gun budget. I just think there's going to be more stimulus, whether it's from fiscal, whether it's from monetary, whether it's from the central bank, whether it's from, whether it's from the central bank or whether it's from the government. There's going to be more stimulus. That's the only way out of this. And the only way out of this without inflation is that stimulus becomes productive. Supply chains are stronger. More people are working. There's more productivity picking up. Inflation doesn't rise. It didn't happen for a long time. From 2003 to 2007 or whatever, from 2009 to 2014, there was no inflation and there was a whole lot of debt, growth. So the Fed balance sheet is going nowhere. Could be the black swan. Geopolitical events and a shutdown. Yeah, geopolitical events are the black swan worry. That's what everybody's worried about. And a government shutdown. I don't believe in government shutdowns. That's just a negotiation tactic. It's not going to shut down. I don't think that's a real black swan. I think it would be geopolitical. If there's a nuke, if China invades Taiwan, right, that's going to be an issue. If Russia extends the war and starts proxy war, who knows? Look, next year, an iPhone 16 coming. We're great. All right. I'm out of here, guys. Appreciate you guys paying attention or just being on here. Again, respect to all of you guys who keep pushing back on me. Push back all you want. Stay tuned. Tomorrow's the big day. Okay, let's go through this one more time. We have the ISM PMI. Is growth accelerating? Is the recession hopes gone, right? ISM PMI is growth starting to expand again. Job openings. Do we get wage inflation? Tax loss harvesting ends. For a $32 trillion industry, no more tax loss harvesting. That means that selling pressure ends for the mutual funds. Fed decision. What is his guidance? Does he hike in December? What does he say? Treasury is going to be refunding. They're going to announce how much they refund, how much treasuries they put on the debt market. I think it's priced in. I could be wrong. We'll see how it depends on the size of treasuries or the size of debt that they create. And it depends on who they target, the short term or the long end, and how they target it. Apple earnings on Thursday. Okay, EPS, revenue, margins, most importantly, guidance. On Friday, payrolls, unemployment, wage. Oh, what the hell? Okay, there we go. Payrolls, do we have jobs? Unemployment, is it spiking? Wage inflation, are average hourly earnings moving up? I doubt it. Labor participation, are people still coming in the labor force? ISM services, is the service economy still going to carry this economy? All right. Appreciate you guys as always. Have a great day. Stay blessed. Get your workout, get your diet, get some good sleep. It's like steroids. All right. Catch you guys later.